Welcome back to the Trader's Paradise. We've got an absolute beauty for you today, a masterclass on turnaround stories. We'll look at a little bit of theory and then we'll look at one live situation that I'm currently playing where I believe there is a turnaround story underway. I've put together this very comprehensive video and I would highly encourage you to stay till the end. Do not give in to your short attention span. You will thank me later for that. If you're new to the Trader's Paradise channel, this is the home of trade idea generation. We discuss trade ideas live in financial markets and discuss how to structure them for massive success. If this resonates with you, do subscribe, like and share these videos with your friends. I'm sure they'll love you for that. Today, we'll look at a very interesting situation. In the professional traders and investment world, this is known as a turnaround story. Now, I know that many of you are relatively new to financial markets, trading and investment. Therefore, I'm going to dig deep in terms of what a turnaround story entails, the different stages of a turnaround story and how to identify them, and eventually, I will look at one particular company called Tronox Holdings where I currently have a live trade going on. But before we get into that, guys, you know the drill, right? This is not financial advice. This is purely for educational basis. Do read the disclaimer, and for the love of God, no copy trading, please. Do not try this stuff at home without proper supervision. Let's start off by looking at what constitutes the anatomy of a turnaround story. Different companies in different industries are exposed to specific business cycles linked to that industry. Companies that have experienced growth in the past might eventually reach a point where the business cycle has peaked. What does that mean? It means that the industry will no longer experience the same level of growth as in the past. In fact, it can even reach a point where growth becomes negative and we see a slowdown. As the growth trajectory gets impacted, the share price will also eventually reflect that. As you can see in the chart, many companies will tend to experience this boom and bust cycle over their lifetime. We also tend to see this more often within cyclical companies. These are companies whose business is closely linked to the economy or closely linked to GDP expansion and contraction. What's even more interesting from this chart is that as everyone hates the stock, sells it, the share price collapses, but we come to a point where the dust settles, and this leads the way to a significant recovery over the next few quarters or even years. So, our job here is to first of all understand the different phases of the company life cycle. And then, if we find a company that is hated, has been beaten down and left for dead for many quarters or sometimes even years, we need to figure out if this is going to change in the future. Therefore, it's very important to understand what constitutes the anatomy of a turnaround story. In the next few slides, we'll go into a bit more depth to understand what actually happens to a company as it's going through all these different stages. And also, we'll touch a little bit in terms of investor psychology or what's called sentiment for us to be able to understand why the share price is acting the way it is. Essentially, what we're trying to find out is, as the company embarks on a recovery eventually, what are the factors that we need to be looking out for that are recognizable and that would give us a high probability of being able to position for a proper turnaround and therefore benefit from the significant upside from the share price moving up. When analyzing a turnaround story, it's always important to go back and understand the factors that have caused the company to underperform in the past. Now, as we've discussed before, as the industry cycle peaks, the company's growth would also tend to flatten and eventually could even decline. However, it's also important to understand that the industry cycle or business cycle is not always responsible for the company underperforming. Sometimes a company's underperformance could be due to operational challenges, wrong capital allocation, overuse of debt, or even a merger that did not go as planned. There could be various factors behind a company underperforming and its share price collapsing. For us, it's very important to understand exactly what those factors are, because as we look towards a turnaround story, to a large extent, many, if not all of these headwinds have to be addressed before investors will be willing to give credit to the company and re-rate its share price upwards. The macro environment could certainly compound this. As an example, if interest rates go up, financing costs become more expensive, and this in general drives a slowdown across different segments of the economy. Another example is inflation rates going out of control. This could increase raw material costs or input costs of the company, significantly reducing their margins and therefore their profits. At the same time, high inflation rates could also mean lower customer demand. All this uncertainty around these different factors might start making investors nervous. While this is happening, management will try their best to reassure them. Sometimes they might even undertake some tactical measures. This would start off with temporary cost-cutting measures such as laying off staff, trying to right-size inventories, trying to run operations at much higher efficiency levels, and eventually, one way or the other, it would lead to a review of the strategic priorities. The astute investors will recognize that the business has peaked, whether it's because of the industry cycle or because of operational challenges that the company itself is facing. They will tend to sell and ask questions later. So this constitutes the first stage of a company peaking and falling from grace. As more information comes out over the next few quarters, the selling phase will tend to get exacerbated. Management will come out with profit warnings. The numbers will show declining revenue growth and margins, which means lower profits for the company. The declining business fundamental will also lead to a decline in the cash flow generation ability of the company. This could in turn mean dividends being cut or removed altogether. With poor cash flows, the creditworthiness, that is the ability of the company to repay its debt, could also be significantly impacted. As the creditworthiness of the company gets downgraded, its access to cheap capital also gets limited. This will in turn mean that they are not able to invest in future growth projects. By this stage, it's pretty clear to everyone that the company is in trouble and having a lot of operational and cash flow issues. Investors will actively start selling their holdings and will see the share price collapse. After a while, the company starts getting ignored. Everyone hates the company, don't want to talk about it again. They've probably sold their shares at a significant loss. And eventually what will happen is that coverage of that company will be reduced. So there are fewer analysts looking at it, and the financial media barely even talks about that particular company. Meanwhile, the management could have been replaced, or the existing management could come up with a new management operating plan that involves right-sizing through significant layoffs, selling non-core assets to raise cash, restructuring of debt. So, as you can see, the management is now trying by all means to restructure the business. By now, only a few people are paying attention to management actions and commentary. No one really cares about the business, no one's really looking into its fundamentals. The measures taken by management could take a bit of time to bear fruits. The financial reports are backward looking, so they would still look terrible, confirming everyone's hate and disbelief in the company. Emotional bag holders, who are investors who have incurred significant losses on the stock and are still holding it, have no hope. For them, there's no future in sight because they cannot look beyond the significant losses and the emotional turmoil that they're currently in. Finally, management actions start yielding fruits. However, skeptics will still dismiss it as one less terrible quarter. This is when we start paying attention to the company, because remember, what we are looking for here are inflection points. We start doing some fundamental work on the company and also try to understand what's happened in the past. Now, what we're trying to do is to find clues to understand what might lie ahead in the future. It's important to understand that we'll still have poor visibility on the future because remember, the business is turning around, it's been restructured, there are lots of moving parts, and we can't really rely on the past to establish what the path might look for the future. At this stage, astute investors will start accumulating shares of the company patiently. This could last for a number of weeks or even sometimes a number of months. The share price stops falling and instead starts trading within a range, or what we call trading sideways. Now we start seeing green shoots within the business fundamentals, and management reiterates their confidence in their plans. We start hearing positive commentary from management about the industry recovery, and we could also start hearing the same from competitors. It's only a matter of time now for management to start issuing positive guidance on revenue, margins, and future earnings. At this stage, after all the work and restructuring done by management, we have a revitalized company with a leaner balance sheet and very possibly an improved operating leverage. This just means that extra revenue will trickle down to the bottom line much quicker than in the past. As positive sentiment within management and the investment community takes hold of the company, financial figures start showing improvement. What we will normally see is that cash flow generation has significantly improved. Management can now restate the dividend or even increase it. This will be a big favorite with investors. Management can also use the extra cash flow to pay back debt and significantly improve the capital structure of the business. Management could also look at acquiring companies and therefore gain market share from that perspective. With the improved sentiment, we also get better coverage from analysts and the financial media, and eventually investor confidence rises. With all the attention that the company is getting, the share price will also respond accordingly. As traders, we want to participate and make sure that we position in the early innings of the recovery. Sometimes we might want to wait a little bit more to get confirmation signal that tell us that the recovery is definitely underway. Why should we be interested in turnaround stories? Well, the returns that we can make are definitely outsized. Why is that? As everyone in the investment community catches on to the story, the share price will rise very significantly. And as traders, if we participate early, we will be able to make a significant amount of risk-adjusted returns. We're now quite knowledgeable about turnaround stories. We've gone through the anatomy of what constitutes a turnaround story. We also know what are the recognizable factors that would lead us to believe that a recovery could be underway. That being said, as traders and investors, our job is to identify these ideas through our process. It's very important that through our research, we are able to identify companies where a turnaround story could be underway and position for it. Keep in mind that when a company has undergone significant restructurings, there's a lot of risk, and a lot of times there's not enough visibility on how the future might look like. Therefore, you're always taking a little bit of a contrarian view here. There are a few scenarios that could play out. Firstly, you might be totally wrong on the idea. Secondly, you might be a couple of quarters early in terms of the recovery and totally miss it out. This is especially true if you're a short-term trader with a time horizon of a couple of months. However, as a trader and even an investor, our mission is to be able to time our entries properly so we position ourselves ahead of such massive moves. And guess what? It's your lucky day. We'll look at a company called Tronox Holdings listed in the US, where we'll apply everything that we've learned about turnaround stories and use our blueprint to identify the various factors within the business that have caused it to underperform in the past, and then have a view on the future as to whether these factors are improving and what this could mean for the company and eventually its stock price. Tronox Holdings is a specialty chemicals producer of titanium dioxide, zircon, and pig iron. Now that's not very sexy, so for future reference, we'll call these feedstock. Feedstock as in raw materials that are used in other industrial manufacturing processes. At the time of recording, it's trading on the New York Stock Exchange at $14.85, giving it a market cap of $2.33 billion. It has a forward price earnings ratio of 18.7 times and currently has a short interest of around 6.4%, which is around 7 days to cover. This slide comes from the company's presentation. As we can see, the main product of the company is titanium dioxide, followed by zircon and other products such as pig iron and so on. These feedstocks are used mainly in industries like paints and coating, plastics, and paper and specialty. So in other words, these are the raw materials for other industrial processes, as I mentioned before. It's also important to note that the majority of their sales are outside North America, primarily in EMEA and Asia Pacific. This rather global revenue exposure also means that we need to be aware of whatever's happening in those regions, because the headwinds and tailwinds over there will also have an impact on the business. Also, they are likely to earn a lot of their revenue in foreign currencies, which introduces a little bit of risk if the US dollar were to rise. The other thing to note here is that Tronox Holdings are highly vertically integrated. Actually, if you look around in the industry, they are the highest in terms of vertical integration. What does that mean? It just means that they control a large part of the value chain in producing these feedstocks. So this gives them a lot of influence in terms of where they can cut costs, which we need to keep in mind as we are looking at a turnaround situation. We'll come back to this later. So looking at the past of this company, it seems that their revenue and earnings growth have peaked in Q3 of 2022. So they have been in a downturn for a number of quarters now. So basically what's happened is, as industrial manufacturing activity has normalized after COVID, the industry has ended up with high inventory levels. The clients of Tronox Holdings were then working through their existing inventories and therefore ordering less from Tronox Holdings. As a result of reduced customer demand, we can see from the chart, actually if we look at the blue line, the revenue growth starts to fall. And that becomes a little bit of a problem for a company like Tronox Holdings that have high fixed costs. Without going into too much detail, the process of manufacturing the feedstock requires quite a bit of mining activity and processing of ores. As you would know, mining is an industry where you have relatively high fixed costs. You need a lot of mining equipment, you need to set aside budget for the maintenance of the mines, and a lot of these expenditures have no correlation with the volume of mining that you're doing, hence why we call this a fixed cost. Long story short, the reduction in revenue growth means that the high fixed costs start biting. We call that poor fixed cost absorption. The result of this is that the margins of the company collapse. The cash flow generation ability of the company is affected, and this leads to poor earnings for a number of quarters. As we work through these quarters, management is also issuing guidance, and this is indicative of a poor outlook. So it's not a surprise that the share price collapsed by so much over that period of time. As we look back at what's transpired in the past few quarters for Tronox Holdings, you'll also realize that a lot of what I've mentioned seems very familiar when you go back to the anatomy of a turnaround story. So that should get you excited, right? Not so fast though. We are traders and investors. We are focused on the future. Whatever we've discussed just now is the past. However, it's critical for us to understand the factors that have caused the company to underperform. As we look towards the future, we'll be narrowly focused on these same factors. We'll look for cues from the industry and from the company itself to understand the likelihood that these factors are going to be addressed, and also to understand if we are standing right in front of an inflection point for the company. So once again, if we go back to our anatomy of a turnaround story, this is actually the blueprint that we'll be using to understand whether there is a likely opportunity ahead of us. I've attempted to summarize the industry cycle for you. When clients of Tronox Holdings are experiencing healthy demand for their products such as paint, coatings and others, that depletes their inventory levels. These clients will then order more feedstock from Tronox Holdings to maintain optimal inventory levels for future production. As the end user demand falls, then the inventory levels for Tronox Holdings clients deplete at a slower pace. These clients have no longer the same need for feedstock, and they will tend to delay their ordering of feedstock from Tronox Holdings. This leads to the slowdown or reduced revenue growth for Tronox Holdings. As this phenomenon gets underway, the inventory levels across the value chain rises. To compound matters, some manufacturers of feedstock can even provide discounting to try to stimulate demand, so this has a negative impact on the price of the feedstock. Titanium dioxide is particularly known to be impacted by cheap exports globally from China. As the industry cycle peaks, Tronox Holdings will first experience slower sales volumes, which will then be followed by price reduction. So their revenue is a function of sales volumes times price, and their earnings is revenue minus costs of production minus operating costs. As the revenue falls, fixed costs, which are staffing, mining costs, etc., become a higher percentage of the revenue and starts biting. This is what we termed as poor fixed cost absorption earlier. The cash flow generated by the company plummets and causes earnings to drop significantly. In light of the weak customer demand and poor outlook, management has to lower production capacity levels. At these lower production levels, the fixed costs become even more difficult to absorb. So we get into this vicious cycle that we call the declining revenues curse. These high fixed costs lead to poor operational leverage, as we've discussed before. Therefore, the management has to intervene and take corrective actions. They start to cut the fixed cost and try to make the company leaner. This will provide the company with a longer runway to withstand the storm that they're currently in. Let's dive a little bit deeper into the value chain of Tronox Holdings by looking at a company called Axalta Coating, which is a paints and coatings manufacturer. From their company presentation, we can have a look at their focus during the whole year of 2023. It's literally been around right sizing of inventory levels and cost optimization. So it's no surprise that companies like Tronox Holdings have been having such a hard time with declining demand and revenue. From the last quarter's earnings a few weeks ago, we've noticed a slight recovery in the revenue for Tronox Holdings. This was led by a higher volume of sales of titanium dioxide. We also noticed that price hasn't yet recovered, but what we believe is that once sales volumes recover, the next thing to recover will be price. We're still not out of the woods for revenue linked to zircon sales, which is impacted by electronics manufacturing still being in a slowdown. However, we've seen sequential quarter-on-quarter improvement in the last quarter's earnings. Now keep in mind that when I was coming up with this trade idea, I was trying to play the Q4 2023 earnings, so I did not have access to the information that you're seeing. All I could rely on were data from Q3 2023, and I thought my chances were quite high, even if the picture was still quite murky. The management also indicated that their outlook was a lot more favorable for 2024, and that they were seeing a recovery in both sales volumes and eventually price by the end of 2024. As you will also note, management also indicated in their commentary that January, February, and March numbers are likely to be quite strong. So that gives us a lot of conviction in terms of what's happening in the industry and how Tronox Holdings will be able to take full advantage of that. Above everything though, management indicated that they will be able to achieve a much higher margin for 2024. Higher margin means higher profits, and investors really like this piece of news. So now, as we've looked at all the qualitative and quantitative information from the company, the question in our minds should be, are we at the early innings of a turnaround story? Remember what we said about our game plan for turnaround stories. We want to be positioned before an inflection point happens. The advantage of having done your research well in advance and identified the factors that had made the company underperform, and at the same time seeing the changing landscape within the industry and the company as well, is that now you're so well positioned to take this new information that the company is releasing to figure out what might happen with a very high likelihood for that company. This is what I call setting yourself up for success. It's all about being one step ahead of the market. As the market is still catching up to the story, you know with a very high level of conviction what's going to happen for this company in the next few months, and therefore you can predict that the share price can have significant upside potential from here. It's not a surprise that the share price has rallied quite a bit recently, and that demonstrates the turning around of the company, and with that, the investor sentiment also turning. If you look at the share price, it has been trading sideways for 3 quarters, and it has attempted to break out in the past. However, this has never really been supportive by the fundamentals of the company and the industry. It's quite interesting, right, when you overlay whatever we've discussed about the anatomy of a turnaround situation onto an actual company and a live situation, and you see everything in motion. This really gives you a blueprint to understand how to find these turnaround situations and how to play them with high conviction. Because at the end of the day, a lot of this cycle is repeatable. You'll see this across industries and sectors. And if you're able to recognize these patterns and identify the factors that drive the stock price, you're setting yourself up for massive success. So coming back to this, the question we have to ask ourselves now is, are the stars aligning for Tronox Holdings to outperform? At this point in time, we have better visibility on the future from recent earnings. We've also seen one analyst upgrading the price target to 19 while maintaining his outperform rating. Technically, when we look at the stock chart, it's also poised for a breakout. We've seen 3 failed breakouts in the past, but I think it's now going to happen as the company is turning around fundamentally, and this will be supportive of the leg higher in the share price. Let's quickly look at the sales forecast and the earnings forecast for the company in 2024 and 2025. Analysts are predicting quite a healthy recovery in revenue, which would lead to a significant increase in earnings over the next few years. 8 analysts currently cover the stock with a price target between 14 and 19. I think there is a significant chance of these price targets getting upgraded as the company keeps performing well fundamentally. So, as a summary, in terms of catalysts, this is what I'm seeing on the horizon. I believe we'll see a significant recovery in client feedstock demand in 2024. Management is positive. Also, we've seen sales volumes recovering and trending up. I think the price recovery for this feedstock is now next on the cards. This will be a confirmation signal that the recovery is healthy and underway. If we have further industrial manufacturing expansion in the US and the rest of the world, the demand for feedstock will keep rising. As we've seen before, management has guided to healthier margins. We also now have a leaner company with much better operating leverage than before, so it will be able to take advantage of higher revenue as we go along. I also think the analyst community will catch up to the story and upgrade the stock. On the 11th of March, we have a competitor, Kronos Worldwide, which is operating in the same industry, which will be reporting. This could give us a lot more clues and confirm the improving industry outlook. Another potential tailwind would be a broader recovery amongst cyclical companies. I think this turnaround story has a lot of legs to be successful. So, how am I playing this? Well, I think markets are forward-looking and will position for earnings beat potential over the next 6 to 12 months. In the interim, I have a price target of $16, which at the time of filming this video is only 8% from the current price. Before the Q4 earnings, I was buying call options with a strike of 14 expiring on the 15th of March 2024 at 33 cents US dollar per contract. At the price target, my options will be worth $2, which gives me a return on investment of 506%. Not bad, right? But the story doesn't stop here. The trade is structured with uncapped upside. If the market catches up to the story and started chasing it, the price could really move to $18 and above. At that point, the return on investment is more than 1,000%. It would be around 1,100%, which is phenomenal. So you hear me a lot of times saying you need to set yourself up for success. This is exactly what I mean. In short, find high quality, high conviction ideas where the share price could really move, position for it, structure with options, and just wait for good things to happen. If the thesis doesn't work out, you just lose your premium. But if it works out, you make a significant return. And also, if it works out beautifully, then you've really set yourself up for success. So I hope this gives you an idea of the power of using options and structuring ideas in that manner. But also remember, it's not just about buying options, right? It's about finding the idea, doing the research, working out what's the likelihood of a move happening within the window for which you've bought options. Don't be crazy and just go buy options. Options are just a tool for you to structure risk. There's a lot more that goes into the process before you even start looking at buying options. Options are great because it allows you to limit your downside while keeping your upside uncapped. So going into a trade, you know exactly how much you could lose. Now in the beginning, remember I said turnaround stories can be quite risky because it's a little bit of a contrarian view, right? So we also have to understand what are the risks to the thesis here. The risk really is that excess inventory across the supply chain keeps lingering. This will keep future demand lower. This could be compounded by cheap exports from China, flooding the markets, and therefore reducing future demand for companies like Tronox Holdings. Another risk is that interest rates stay higher for much longer, dealing a blow to industrial demand. At a company level, we could also see a situation where Tronox Holdings incurs additional costs in ramping up its production. Although this will be temporary, it will not lead to improved margins as management has indicated. A global industrial recession is also something that we need to watch out for. The thesis will definitely not work if we get an industrial recession at a global stage. And then, as I mentioned, the pricing for titanium dioxide and zircon can keep falling. That comes with the risk of cheap global exports from China. We just need to watch out for these things. Well, if you've made it this far, well done. This was a pretty comprehensive video, but well done on you if you've made it till this far. I'm sure you've learned a ton. I'm sure that's given you a lot to think about. I'm sure it's also opened up your perspective when it comes to financial markets and how doing your own work and thinking independently can literally set you up for success. Guys, this is it from me. I hope I'm providing enough value for you to like, subscribe, comment, and also share these videos and this channel to your friends who might also benefit from all this knowledge. Look, this information is groundbreaking. not many people know about this, and I think it's our duty to educate and bring this information out more in the public. I normally joke about this. Out of 100 people who have seen this information, there's probably only one who will think, oh my god, this is life-changing. I should embark on a learning journey and just go out on my own and try to capture these opportunities. The rest of them, sadly, they're still going to be on Netflix, browsing, flicking through their phones and whatnot. But, you can always choose to be different and stand out from the crowd. I mean, really, this kind of information, this kind of insight into the trade idea generation, the thought process and everything should give you a lot to think about. It should rewire your brains and cause you to think a lot more independently, do a lot more work on your own, and play these opportunities that are out there in plain sight in the market. With this, I'll take your leave. Give yourself a pat on your shoulder for getting till this point. You're definitely exhibiting the right behaviors.